I mean, what did you learn from the U.S., not inflation number, but actually the surrounding commentary yesterday?
That clearly the central bankers are quite worried about the second round effects and how much it's going to take to actually squeeze inflation out of the system, probably looking at needing a recession to get things back to kind of target consistent levels.
Can we get away without a recession actually in the U.S., given all of the hikes that we've had so far, and given actually the Fed needs to do something to the labor market if you're going to get inflation down to a meaningful target?
We don't think you can, actually. We think that a recession is necessary. We're looking at something like a 1.5% peak to trough decline, and only then will we start getting inflation, maybe next year, closer to target. But we've got second round effects, high wages feeding through. There's evidence of that. And central banks have to be mindful that financial conditions have been loosening, and they've been banging the drum that they can't ease off just yet. And actually the recession is probably needed to get all of the inflation out.
So Hetal, what kind of recession? Is it going to be like a deep and ugly recession because there's maybe over-tightening from the Federal Reserve, or is it going to be a kind of shallow recession but maybe stays longer than we're expecting it to?
Probably somewhere in the middle, 1.5%, I think. Peak to trough would be probably on the milder side, certainly milder than what we saw post-financial crisis. And the recovery, though, is going to be slow. We don't expect much in terms of employment gains. Once we even come out of it, it's going to be a jobless recovery. So, yeah, I'd say middling.
What if the labor market holds on? Again, there's so much evidence at the moment, and it could change, very quickly, that the labor market is tight in the U.S. That it's very difficult to find the right job or the right people for the right jobs because of a lack of skilled workers.
Yeah, I mean that's the problem we're seeing everywhere, including in Europe as well. The shortage of workers trying to cool the labor market, and we know the labor market's a lagging indicator, but we would have expected by now more cracks to have appeared, and that is one part of the puzzle where the resilience has been quite astonishing.
Hetal, we talk a lot about the UK and the fact that we have the other problems of the world, certainly the problems that we have in Europe and the US, but distilled and condensed in the UK. Is the situation very similar to other parts of the world?
Some elements are very similar, so tight labour market, deteriorating housing market, stagnating GDP. But we have had a confluence of other things in the UK, the shortage of workers exacerbated by Brexit and other things. Inflation here in the UK still double digits despite the decline. Core inflation is coming off, but again, still very high from very high levels.
So how do you think that the BOE is looking at this? I know, and I've taken a bet, I won't say which way I've taken a bet, but the March 23rd hike is now in question.
Yeah, so I think that one's going to be quite a close call. So the signal we got from the last meeting was that Bank of England's probably done. They were going to be hyper data sensitive. The wage numbers we had yesterday are definitely pushing towards a rate hike is necessary. Today's numbers will be a relief, and I think that's where there's probably going to be quite intense debate on the Bank of England for the rate hike. But more importantly, at the end of the year, I think it's going to be very difficult to see cuts. I mean, in the US, if they carry on hiking for longer, it just narrows the window for that about turn in policy. And in the UK, we think core inflation is going to be so much higher for longer that the Bank of England won't be able to cut, even though after today's numbers, the market's starting to price in a bit more of that. We think it's unlikely.
Well, it was interesting last time where we were at the Bank of England to hear them, I guess, move away a bit from the doomsday scenario, but actually it's going to take a long time for any kind of meaningful growth to come back.
Yeah, it is. And the other part of the Bank of England's assessment, which I thought was really important, is what they're saying about potential growth. So we think, and we agree, potential growth in the UK is going to be 1%, at best. Yeah. It just means you have to have an even bigger downturn in the economy to squeeze inflation out. And so, yes, in the near term, we've had some better data, labour market's holding up, but the medium-term assessment is very bleak, and actually we would concur with that.
Hetal, what are you expecting from ECB?
ECB, I mean, they've pre-committed, haven't they? Again, despite no forward guidance, they've told us with some certainty what they're going to do. So I think, next meeting, it's a 50. Thereafter, I think 25, most likely. There's definitely a kind of looking in the rearview mirror, looking at what the Fed's saying, going on, I think. But the inflation problem in Europe, similar in the sense that the energy price shock is still keeping those second round effects going. Maybe less tight in terms of the labour market there, but similar problems.